All right, let's talk about Japan Tobacco's Q2 2025 earnings call. The results dropped after hours in Tokyo, and to say the market liked what it heard, well, that would be a massive understatement. Let's dive right in.
And boom, the very next day, the stock just took off, surging over 6% on the Tokyo Stock Exchange. Now, this wasn't some little upward drift. Nope. This was a powerful, decisive move from investors who clearly loved the numbers and the company's new outlook.
And check this out, because this really shows the conviction behind that price jump. Trading volume absolutely exploded, more than 5 times the previous day's level. We're talking a leap from under 4 million shares to over 21 million. That is a huge wave of money giving a big thumbs up to the company's direction. So what on earth did they see?
Okay, let's get into the nitty-gritty, the financials that really got the bulls running.
First things first, to really get the JT story, you have to understand their main metric, adjusted operating profit, or AOP. This is how they measure the real health of the business, kind of stripping out all the one-off noise.
And yeah, that health is looking pretty robust. Revenue was up over 9% for the quarter, which is great, but look at that AOP line, up over 20%. Now here's the really interesting part, the constant currency number. Take away all the weird currency swings and their AOP surged almost 29%. That tells you the underlying business engine is absolutely humming.
You know, strong performance is one thing, but it's another when management actually translates that into confidence. And that's exactly what they did. They raised their full-year guidance across the board. The big one here is that AOP forecast. They jacked it up by over 12% from their initial outlook. That is a huge vote of confidence halfway through the year.
And the cherry on top? They raised the annual dividend per share to 208 yen. That's about as clear a signal as you can get that management thinks this performance is here to stay, and they want to put cash directly back into shareholders' pockets.
So, the big question is, how did they pull this off? Well, it really boils down to a super clear 3-part strategy that they just executed perfectly this quarter.
Let's break it down. It's all built on 3 main pillars. First, using their traditional cigarette business as a cash machine. Second, building some serious momentum in their reduced-risk products. And third, sharpening their focus with some smart portfolio moves.
Let's start with the old-school business. Don't let anyone tell you combustibles are dead. JT showed they have incredible pricing power, raising prices in big markets like the Philippines, Russia, and the UK. Plus, that Vector Group acquisition they made in the US is really starting to pay off, adding volume and a nice high-margin product mix.
But let's be honest, the real excitement, the story that has investors buzzing, is the incredible progress they're making in the heated tobacco space. This is the future.
And it really all comes down to one product, the new Ploom AURA device. It just launched in Japan, and the feedback from consumers has been fantastic. People are talking about its stronger kick and rich taste, exactly what you need to hear if you want to win people over from competitors.
And that great feedback, it turned directly into sales. In just the first 3 weeks, the new Ploom AURA sold 3 times more than the old model did in the same situation. I mean, threefold. That's not just a good launch, that is a certified hit product right out of the gate.
The final piece of the puzzle is all about strategic clarity. By selling off their pharma division, JT is sending a very loud and clear message to the market. We are laser-focused on tobacco and our high-growth next-gen products. It just makes the whole story simpler and puts all their firepower where it counts.
Now, for as amazing as this quarter was, management was also really upfront about the road ahead. It's not all going to be smooth sailing, and it's super important to understand the challenges they see coming.
Management is basically telling us to expect growth to cool off a bit in the second half of the year. So why is that? Well, first, they're up against tougher year-over-year comparisons because of the Vector acquisition. Second, some hot markets from the first half, like Turkey and Russia, are probably going to slow down. And finally, they're going to be spending a lot more to roll out Ploom AURA around the world.
They also lowered their free cash flow forecast, which definitely raised a few eyebrows. But management was clear. This is because of known one-off things. We're talking cash going out for Canadian legal settlement and some temporary working capital stuff. They pretty much called it transparent housekeeping, not a sign that the business itself is weakening.
And of course, looking at the bigger picture, there are 3 main risks on their radar. Competition in the heated tobacco market is getting fierce. As a global company, currency swings can always hurt you. And finally, you've always got that geopolitical wildcard of potential US tariffs to worry about.
So, you take all that into account, the fantastic quarter, the clear strategy, and the very real risks. What's our final call as we look ahead to the next quarter?
Here's an interesting idea we're kicking around.
A classic pair trade. Go long on Japan Tobacco and at the same time, short their biggest rival, Philip Morris. The thinking is pretty simple. JT has this incredible momentum with Ploom AURA, which is about to go global. Philip Morris, on the other hand, is the big guy facing all that new competition, and a lot of that competition is coming from JT. We think JT's success could steal market share, and the market might not be fully appreciating that yet.
So here's the bottom line. Japan Tobacco just delivered a knockout quarter. We're seeing excellent execution, really powerful innovation, and a much sharper strategic focus. The momentum here is undeniable. The big question for the next call is whether this Ploom AURA phenomenon can go from a Japanese hit to a global blockbuster. For now, we are initiating with an outperform rating. This is not financial advice.